All right, let's dive right into this explainer. Look, if you're tuning in, you probably already know what a stock is, but actually navigating the global equity markets with real mathematical consistency? Well, that requires a major upgrade from casual participation to a highly structured, systematic blueprint. Today, we're taking the massive amount of information out there and distilling it right down to the absolute essentials. We're going to give you exactly what you need to successfully execute your strategy rather than just crossing your fingers and relying on hope.
So here's our exact roadmap to get you to that institutional level consistency. We'll quickly cover the online trading ecosystem, setting up your account, choosing a trading platform, mastering market analysis, and finally, smart risk management.
All right, let's kick things off with Section 1, the online trading ecosystem and its foundational rules. I really want you to ask yourself the question we're looking at right now. Why? Because moving away from emotional guessing is literally step one for long-term survival in this game. As an active market participant, your primary objective is straightforward, but man, is it incredibly challenging. You have to capitalize on structural price appreciation, capture payouts, and above all else, protect your capital from severe drawdowns. To pull that off, you need to deeply understand order execution and liquidity pools. You absolutely have to rely on a systematic approach because, trust me, the market does not care about your gut feelings.
Which brings us directly to Section 2, setting up your account and getting past the gatekeepers.
You know those KYC, Know Your Customer and AML or anti-money laundering checks? The ones that always feel like a totally annoying bureaucratic hurdle. Actually, scratch that mindset entirely. They are your absolute foundational defense against operational risk. Before you can place a single market order, establishing a fully verified profile is non-negotiable. Rather than seeing this as a headache, understand that these incredibly strict regulatory protocols are exactly what keep your money safe in segregated bank accounts and prevent systemic financial fraud. Having a fully regulated service provider is, quite literally, your moat.
So getting past those gatekeepers really just comes down to 4 exact onboarding phases. Step 1 is provider selection, where you're comparing regulated partners based on asset availability, fee structures, and execution speeds. Step 2 is identity verification, just securely submitting your government ID and proof of residence. Step 3 is your capital deposit, safely routing your funds through approved systems like bank wires. And finally, Step 4 is your platform setup. This is where you lock down your security credentials, activate two-factor authentication, and most importantly, customize your default risk parameters.
With the red tape cleared and your account funded, let's jump straight into Section 3, choosing a trading platform, which is basically your primary weapon.
Picking the right software? It completely depends on your specific trading style. For example, if you're managing swing trades and looking for intuitive, zero-commission equity investing, a provider like XTB is a huge asset. Just, keep an eye out for inactivity fees if you happen to step away from the desk for a while. On the flip side, if you're running automated, high-frequency strategies, you're absolutely going to want something like IC Markets for that deep institutional liquidity and lightning-fast execution. And hey, if you demand direct market access with the tightest possible spreads, FB Markets is going to fit the bill, provided you can handle the higher initial deposit required for those advanced tiers.
Whichever provider aligns with your unique strategy, always remember that this platform is your central command hub. Modern digital setups, whether we're talking about proprietary web apps or massive industry standards like MetaTrader or TradingView, seamlessly integrate real-time price feeds, incredibly sophisticated charting packages, breaking financial news, and automated risk control functions. It's the engine that empowers you to execute orders, aggressively adjust your portfolio, and run complex market analysis tasks, all from one highly responsive interface.
Now that your command hub is totally online, we actually need to find those profitable opportunities in Section 4, mastering market analysis and learning the language. To be consistently profitable, you really need a dual-threat methodology. You can't just pick one or the other. Fundamental analysis is all about the underlying business. It's determining the intrinsic value of an enterprise by ripping through corporate financial statements, earnings reports, cash flow velocity, and those larger macroeconomic trends. On the exact opposite side is technical analysis. This is the precise study of price movements to perfectly time your entry and exit. We're talking reading candlestick patterns, recognizing momentum shifts, and mapping out rigid support and resistance levels. When you successfully integrate fundamental evaluation with precise price action analysis, you stop emotionally guessing and start operating like a probability-based machine.
And finally, we reach the absolute most critical part of our blueprint, Section 5, Smart Risk Management, where we defend your net worth. Listen, if you take only one single metric away from this entire explainer, let it be this number right here. Long-term survival in financial markets is rarely about having some flawless, magical chart setup. Disciplined risk management is the true engine of sustained growth. You have got to implement strict risk parameters. Never, ever risk more than 1 to 2% of your total account capital on any single transaction based on your predefined stop-loss distance. Look, we all know the absolute gut punch of a stop-loss getting triggered, but adhering to this tiny percentage, it guarantees you live to trade another day.
To build an even stronger fortress around your portfolio, you absolutely have to spread your capital across diverse economic sectors. Do not fall for the fatal temptation of pouring everything into a single corporate stock or whatever hot industry is trending on social media. Think about it. Let's say the technology sector suddenly gets hit by a massive unexpected shock. If you're broadly distributed across technology, healthcare, financial services, and industrials, your portfolio just absorbs the hit. Your entire net worth doesn't suffer a catastrophic, unrecoverable drawdown.
Now, you might think demo trading accounts are just for day one beginners, right? Well, actually, highly experienced traders use them constantly as a sandbox. Before you deploy new parameters or risk a single real dollar on a fresh strategy, this is your completely risk-free laboratory. Forward testing your systematic strategies in a demo builds serious statistical confidence and intimately familiarizes you with the exact execution mechanics of your chosen platform without an ounce of financial anxiety. Navigating the global equity markets doesn't require some massive Wall Street connection or complex floor trading protocols anymore. The absolute highest performance tools are sitting right at your fingertips. But as we wrap up this explainer, I want to leave you with a truly powerful thought from our source material. Knowledge alone isn't enough. Execution is what drives results. You now understand exactly how to combine fundamental evaluation, technical chart analysis, and militant risk management. The blueprint is fully in your hands. So, my final question to you is this. Are you ready to take the systematic blueprint, leave the emotional guessing completely in the past, and finally execute at the next level?